Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I are going to talk a little bit more about the markets. First, we'll have a look at some of the indice returns from around the world. Toronto, for instance, is up almost 5% so far this year. The S&P 500 in the US is up 12%. If we turn to London, we got London up about 6%. France is up about 10%, Kris, roughly. Germany's up 20% so far this year. The global leader, probably most people wouldn't have guessed it, so far is Tokyo, up 21% so far this year. Hong Kong up about 14%. So really what we're seeing here is a great kickstart to the year. We're a quarter of the way through 2012 here, and very good returns, probably not sustainable at that pace. 5 months into a bit of a bull run here, Kris. Quite recently, the bull run was extended by two things. Germany saying that they were going to endorse the notion of providing additional funding into the Euro debt crisis funds. And secondly, very recently, Bernanke of the U.S. Federal Reserve indicated that they were going to continue to be accommodative on monetary policy while unemployment in the U.S. remains as high as it is. Kris, I wanted to talk a little bit about what's going on, why the Canadian equity market seems to be lagging the other markets.
Yeah, when you look back, Canada was thought to be a very stable economy, and you would think in light of everything that's going on that we would be leading these numbers, but it's really more of a story that's tied to China, and our resource story has been a very dominant theme in Canada for a long time, and with China recently announcing their growth forecast likely to be lower than their previous 8% number, that's put a bit of a lid on resource stocks and actually caused a bit of weakness in that area, and it does dominate the Canadian marketplace.
Sure. As you say, the Canadian equity market is heavily weighted into materials and energy. So clearly there's an effect there. One of the things that we've noticed is the volatility level has abated significantly, and really there's no ignoring the very strong financial and economic reports that have been backing this up. Now, when I say very strong, Kris, I don't mean in absolute numbers. What I should have probably said is the turnaround seems to be very consistent, and the numbers continue to back that up, sort of week after week or month after month, the numbers that you and I watch anyway. So, here we are with the S&P 500 in the U.S. is at its highest level since May of 2008. That's almost 5 years ago, or 4 years ago now. You just can't deny that things have stabilized, and therefore the volatility overall has come down.
That's right. Well, if we look back a little bit at some of the global macro problems that were in the headlines, that was causing all sectors to kind of move, sectors and markets to move in unison. We've now seen a lot of those problems abate somewhat, and certainly not dominating the headlines. And so therefore we've seen markets move towards what's happening in the individual sectors, what's happening with individual companies, looking more at the fundamentals, which is certainly it's an easier arena to play in, shall we say, than seeing all of the volatility that we saw over the past couple of years.
Right. The notion there is that correlations have changed a little bit, where everything was going up or down, regardless of asset class or equity or sector. It didn't really matter. It was all moving in the same direction. That's changing, and it's now moving more towards, or is in fact maybe in the water a little bit, in terms of it's going to be a stock picker's market, and that's going to require some help for most investors.
That's right. So make sure you talk to your advisor about what sectors and what stocks might fit with your portfolio. Thanks again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. We're going to talk a little bit about the upcoming earnings season and some of the things that we think are going to unfold there. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.